Ladies and gentlemen, welcome to the Midday Market Monitor. In today's episode, we are obviously going to be talking about the great and powerful Nvidia. I constantly just have this hat and I wear it all around that I actually am not like wearing this for this occasion, but boy, oh boy, was that good timing. Okay, so if you guys didn't hear Nvidia, we can just jump right into the news. We have a lot of news today and some other things and topics that I want to get through. So Meta ended up strengthening their deal with Nvidia and wanting to do this across essentially all of their products: networking, CPUs, Blackwell, Vera Rubin platform after that, and just sort of strengthening that relationship. And that maybe, you know, some of the overblown concerns that they're looking towards custom silicon or Google TPUs or a lot of these things might have been potentially a little bit overblown comparatively to just going back to the, you know, the company that can actually deliver at scale and have the lowest total cost of ownership and you know, has actually been seen at a gigawatt data center scale before and not, you know, putting all your chips into a company that might not even be able to deliver on time or be able to, you know, allow you to train on your or train your models to the sort of deliverable time frame that you actually want it to, you know, to happen by. So back to Nvidia we go. And so this stock ends up running on this news along with many other companies like Micron and all of these other businesses after we've seen Anthropic just say that they're going to spend roughly $80 to $90 billion through 2029, paying big cloud providers like Amazon, Google, and Microsoft to run Claude. Essentially, all the pieces that we've been betting on for the past, you know, years and years is actually coming true. That the infrastructure build out is, you know, longer lasting than people think. And in fact, it could actually be for many, many more years. Large customers are going to cloud providers and not just trying to build on-prem, and they're willing to pay Amazon and Google and Microsoft and CoreWeave and Nebius and all of these companies, not just for bare metal, but also the additional services that they also offer, but specifically NVIDIA chips. And NVIDIA has these large customers here. And that's all going to translate in continued large growth rates for the likes of a Google and the likes of an Amazon, the likes of a Meta, eventually, as they, you know, can use better models to then push better advertisements that have better conversion rates, so then they can charge more, like what we've seen with OpenAI's attempt to try to get $60 CPM. Imagine what that happens for Meta at scale, right? And that could be quite exciting for the future of that business model. But underlying all of it is NVIDIA. Now, the concern is that AMD has been gaining so much market share on the CPU side, taking away from likes of Intel. So they've been sort of dead in the water a little bit. And AMD has been able to benefit from this. But now NVIDIA is showing off. And honestly, I think that they're making it so then the headlines are constantly talking about how much their CPUs are actually part of these deals. So the Graces, the Veras, this is all a big part of it. And I think that it actually takes away from some of the bull case that this was a free and open runway for AMD to sort of take over. Jensen saying, no, actually, we're going to take, you know, the gold medal here and be the biggest supplier of CPUs in the world. We'll see how it stacks up. But overall, I remain with, you know, the high majority of my net worth betting on Jensen Huang. And to all the naysayers, I'll see you guys on the other side. Or maybe I won't. Maybe I'll lose and you guys won't ever talk to me again. But that's not the way it's stacking up to be right now. I'm holding strong, baby. SoFi's also looking good today, but that's less on news and more on, well, it is on some news, but I don't actually think it's translating to the actual stock. So SoFi's 10K ended up coming out, and I'm going to have a full breakdown on my YouTube channel here tonight. That's why I'm going to have to probably end this live stream in about an hour or so that I can get that recording out and get that done. But the 10K only strengthened all my beliefs for SoFi. There were a couple things that we didn't end up getting to see that now that the 10K is out that we do get to see. So SoFi is a little bit weird. They don't release all of their financials all at once. We sort of see their initial earnings release and earnings presentation and call about 2 weeks before we end up seeing the rest of this information. So yesterday we ended up getting all of the additional details, like, you know, the coupon rate that they have on their personal loans and what the discount rate is, and you know, what the default rate that they're expecting for those loans, and the total amount of sale of those loans, and the credit card FICOs, and how much they're actually defaulting on credit cards. And the default rate fell unbelievably low. So if you guys want a little background on SoFi here, SoFi used to, here, let me show you this. I'll bring up the slides. SoFi used to have a pretty bad credit card offering. Back whenever we were at just the 2% credit card, you know, the unlimited 2% cashback credit card, things were actually not going super well on their financial side, and that we were seeing defaults as high as 16.4%. The normal credit card range is anywhere between 2 to, let's say, 8%. Okay. 2% is like the ultra great credit card providers. Okay. 8% is more of the subprime, still working very well, but like, you know, higher risk, or potentially just bad macro environment. Timing has to do a lot with that. But the credit card providers for SoFi offering, you know, credit cards at a 16.4% loss rate, while also paying out an additional 2% for all the transactions, let alone not just the, you know, the like how much debt there is. Even if you pay back all of your debt, like, you're still paying out 2% cash back on that. And then, you know, those loss rates stack up extremely quickly. And then, you know, Trump comes out and says he wants to limit, you know, the interest rates at 10%. It's like, dude, SoFi was losing 16.4% a year. Like, this is way worse than like you couldn't offer a product at 10%. However, things are starting to look up for SoFi. And this had happened over time, and we were hopeful that it was going to continue to improve. But now it's proving that it actually is happening. So as we're seeing massive scale up in the total amount of loans offered by SoFi, okay, we're seeing a massive fall off in the default rate. Now, this is a little bit like, as you bring on new loans, there is a little bit of a grace period between them not actually defaulting. So part of the reason why this default rate is falling so fast is because of how many loans that they're actually stacking on faster and faster and faster. So there's a little bit of good news there. However, a 4.1% default rate, which is the number here, which is a little bit small on my screen, and I apologize. Let me see if I can bring this up, is way more scalable than where we were before at 16.4%. This looks unreal. Very excited about the credit card lending side. And that's essentially what the 10K ended up showing off, is that all of these small details that we didn't end up getting for, you know, from the earnings presentation. Like I said, I'll have a full breakdown tonight. Like look out for that video. If you guys aren't subscribed, make sure you subscribe, hit the bell, okay, get notified. Shameless plug over. But let's go ahead and take a look at the stock. Stock's up 2%. Is this attributable to the 10K? I don't know if it is. I mean, markets generally are looking good today, but it should be attributable to the 10K. Like, did SoFi look 2% better after this new information? Absolutely. Okay. Bought more SoFi today. Lena's a legend. Legend Lena just bought more SoFi. I wish I could. These are the hard, honestly, this is so much harder to maintain a portfolio whenever prices are down this much than whenever everything is going up. Because whenever everything's going up, I can just say, okay, you know what? This is what I believe is fair value on these businesses. Let's continue to stack. You know, we're DCAing. Now I'm kind of looking at, I don't know, probably a dozen companies, 15 companies that I want more shares in. I want to start new positions in companies. You know, I want, like, I could totally add a CoreWeave or something like this to my portfolio as well. Feel that super, like that would fit in super easily. But then, why don't I just add more Nebius or more things like this? ServiceNow I could add to. It's already in the port, but I could add more to ServiceNow. But there's so many great deals like this. That's another theme though. ServiceNow, Salesforce, these sort of ones. There was a very funny article that came out today tweet that came out today regarding Anthropic that's hiring for Salesforce administrators. Guess they're not killing software today. Maybe tomorrow, but for today, we're just going to continue to work with the companies that we are trying to replace. And not that even they're trying to replace, but that potentially the tools that they're offering are so good that like anyone will be able to replace a Salesforce. But for now, we buy their product. Yeah, I mean, hey. Walmart, PG, Coca-Cola are performing. Well, I think Walmart's actually having a bad day today, if I'm not mistaken. Yeah, down 1.7% on Walmart. Let's see what Coke and Procter and Gamble are doing. Coke's down a little bit. Procter and Gamble's down 2%. A little bit of flight to risk on today. The VIX is down. Nvidia is up. That's the theme. Also, just a continuous good amount of earnings across like the board, right? Garmin did well. Wingstop did well. Like all of these companies that are, they don't have to be big tech businesses or firms, just like every company is doing, or at least for the most part, most companies are putting up some pretty substantial earnings right now. And these aren't small pops on their companies. I think there's so much bad sentiment right now in the markets that Garmin can put up decent beats. Let's see here. Nearly 6% beat on revenue, 17% beat on EPS, and the stock flies up. Wingstop, up 11.7%. They put up, let's see here. Revenue was actually a miss, 0.7%, but EPS beat by 19%. I wonder if this is sort of the case across all these businesses, like EPS improvements. I haven't taken a look or read about these businesses specifically, so I'd have to see. Yeah, like Solar Edge, bro. Solar Edge. Well, it's down 1.5%, but they beat on EPS by 64% and beat on revenue by 1%. I mean, I don't know if this is all attributable or how much is attributable to artificial intelligence helping with customer support and all of these things, but that is hopefully the use case of artificial intelligence, that it's going to make all businesses more productive. Doesn't necessarily mean that it's generating more revenue, but it's definitely going to help with EPS if that is what's happening. Global Payments Network, let's see them as well. I'm pretty sure they're up a ton today. 16.64%. Height of the day is right now. Figma is up. Well, Figma was another one of these companies that got totally beat up. By the way, they have earnings tonight. Figma got completely beat up, and then Anthropic signed a deal with them. It was like, hey, you know what? Let our tools end up using your product. I don't know. Are we sort of seeing the market all wrong? Nebius is flying as well. Well, I mean, they should be. I mean, if you're going to go risk on, the cloud providers, especially after deals like what we saw with Nvidia and Meta, which just more of the same of, hey, you know what? We're not slowing down at all. Anthropic just said they're giving a ton of money to all the biggest cloud providers. You don't think Nebius is going to be a part of that? I think they will be. Nebius is too risky for me. What do you look for? I actually don't feel that way. I mean, obviously, like risk reward for everyone is completely different, but like, what's the risk? What do people hate about Nebius that is just stopping you from investing? Has anyone actually tried coding on these platforms? Do you think like no one has? No one's tried coding on them. SoFi is what I want. I like SoFi. Yeah, I think that this is a great company. One of the things that I love about financials is like you're for the most part you're not getting innovated away. You have capital, you have money. AI is not going to reinvent money, you know, and so AI should help with potentially finding new customers, increasing product cadence, increasing margins for whatever form of customer service, cutting back administration work, agentic purposes, all of this stuff. And then on top of that, you're lending out the little bank that could. Yeah. How about Uber? I like Uber. They had a weird story though today. I thought it was a little bit of different plan than what I was expecting them to go in, which is them investing potentially $100 million to build fast charging autonomous vehicle charging stations. I mean, hey, all right. What is an autonomous vehicle charging station? Is that a robotic arm that just finds the hole? You know what? I wish I never said that. Okay. Why can't SoFi get above 20? I see way too many of these comments, dude. Like the market shifts around. SoFi takes a rashy bunch of crap all the time. It's fine. It's been like this for like 2 weeks, and then people are like, this stock doesn't move. It's like we were at 7 not too long ago. Like it's patience, young Padawan. Wireless charging, you're so right. I forgot about that with the Cybercab. They do want to do wireless charging. But yeah. Last year, SoFi was $8. I know. I see people going like a bunch of comments where they're like, "Oh, everything that Tanner talks about, it marks its all-time high." I'm like, you're just talking about the market. Like the market's coming down. If you're talking about big tech, then it's going to be coming down. Like, why were you talking about this whenever Nubank was $3.80 or SoFi was $4? Was I marking tops then? It's so funny how like the extreme short-term natures of people's trading strategies marks how they think about following certain people on X or listening to YouTubers, as people say, oh, never take financial advice from YouTube. One, yeah, do your own due diligence, but also two, just realize that this is the market we're in. If there's risk off, then every company I ever talk about is going to get killed during this period. That's the way I invest. I like risk on companies. Consider myself a Brad Gerstner or something like this. Like I like I like investing in areas that I love what's happening at those companies. Okay. I'm not trying to be thematic and move my portfolio over to natural gas or something like this to take advantage of where I think the market's going. I know nothing about those areas. And the truth is, I don't want to know anything. I don't care about silver or gold or any of this boring ass shit that people feel like they can make money on. Go right ahead. I want to invest in where I think that the future is going to be the brightest. Okay. And that's in really cool technology and companies that thrive on innovation. And Yeah. Brad Gerstner's not 5'11". If you're calling me a 5'11" Brad Gerstner, that's funny. But I've met Brad Gerstner. He's a little tiny boy. I met him at CES, shook his hand. It was really cool. I tune in, you're making honestly, no one did this to me. I'm doing this to myself. I'm going crazy here. But you know what's the coolest thing too is that I feel like you can get some less risky businesses while investing in the future. And that's where you end up finding big tech. And a lot of super investors, like we're seeing right now, are investing in big tech companies. Across what we've seen from the 13Fs, we've seen some people trimming Amazon, but I would say most are actually buying it right now. Meta's been a big company that a lot of super investors are buying. Nvidia is another sort of battleground name here where there is a lot of trimming and there's also a lot of buying from different names as well. But no one's sort of going all in on Nvidia right now. I actually think maybe one of the biggest purchasers was Brad Gerstner during this quarter. But yeah. Let's see. Love a lunchtime rant. How many of you guys are on lunch right now? How many of you guys are on lunch? Thoughts on BMNR? So I just updated the sort of thing that's talking, or my spreadsheet on their market to net asset value, or market net asset value, not market to net asset value. And we're just under 1x. So it's like 0.98 or something like this, roughly. The more weeks that we get out further away, because like, you know, I'm not going to be completely accurate on my assumptions of the prices that they've purchased because they don't share that information. So whenever I see like week after week after week, they're not updating us on their share count, I have to make these guesses of how much they're at based on the average price or where we ended up seeing the purchases come in from look on chain or something like this. But it's not a perfect science. You know, what potential price that they diluted at. But every single week that gets further and further away since their last update, it's going to get more and more inaccurate. So my belief is that they probably are very slightly, very, very slightly above MNAV because they wouldn't be diluting continuously to buy more ETH. But still, it's not looking like they're holding up a great premium. I'm still a believer in so BMNR to zero, I literally think is like near impossible. I don't think ETH is going anywhere. I like every single large financial institution has essentially picked Ethereum as being the place where they're building. They're not taking out debt. They're not doing anything that is really disturbing me. And in fact, they're actually starting to stake a lot of their Ethereum now. So now they're making like not quite $1 million a day, but still, they'll be, you know, well profitable, and that will, you know, keep them in the green, hopefully. What about BMNR MNAV trackers? They're as accurate as I am. They're taking guesses. Okay. But ETH will be back. I'm not on lunch, but I'm looking at a snack. Oh, Matt, you stop it. You're going to make me blush. Okay. Can we talk about prediction markets really quick? I thought this was interesting. So one, we ended up seeing an update really here from the CFTC that essentially told everyone, hey, if you guys think prediction markets are going anywhere, think again.
CFTC Chairman Mike Seelig here. Over the past year, American prediction markets have been hit with an onslaught of state-led litigation. In response, the CFTC has today filed a friend of the court brief to defend its exclusive jurisdiction over these derivative markets. Prediction markets aren't new. The CFTC has regulated these markets for over 2 decades. They provide useful functions for society by allowing everyday Americans to hedge commercial risks like increases in temperature and energy price spikes. They also serve as an important check on our news media and our information streams. Today, the CFTC is taking an important step to ensure that these markets have a place here in America and have the integrity and resilience and vibrancy that our derivatives markets deserve. To those who seek to challenge our authority in this space, let me be clear. We will see you in court.
I mean, I don't think it's going away. Bunch of people saying, hey, well, where is Robinhood going to be whenever these things are, getting legalized or deregulated and taken away? That's the opposite of the message that's being put out here. Now, do I think that that's like, do I think that every prediction market is doing good things for the world? Like, I mean, there was a poly market event. I don't know if I saved it here, but it was doing 5-minute prices on cryptocurrency. Where will Bitcoin's price be 5 minutes from now? Maybe that's not a great hedge on like trying to keep tabs on the media or something like this, or keep them truthful. I don't really agree with that, but like whenever it came to like prediction markets for elections and stuff like this, I think they were extremely, extremely useful. But yeah, so that's a little bullish state on Robinhood. Now, then I had made some claims to say that I think prediction markets will be extremely large, and this is only going to get bigger, and that there's going to be prediction market funds and stuff like this. And then people go, oh yeah, sport market fund or sports events funds that people can, bet on, which people think is a joke. But I'm not saying that you guys have to actively invest in something like this, but whenever it comes to, putting your money with not a bookie, but potentially like a sharp that ends up looking at all the data, they will take a take rate on your money to bet on certain sports events. I mean, these are complete and clear markets that happen. And now Susquehanna is looking for people to build real-time models for uncertain event-driven outcomes, weather, probabilistic events, and turn these into fair values and actively trade on them. They're talking about senior traders in prediction markets. This is crazy. But it's a very real market. You can bet on Jesus Christ returning before 2027. Yeah, but like, do I think that adults should be able to bet on this? Go right ahead. Like, I don't care. But if you don't think that the probability of that happening is true, then don't bet on it. People are also worried about like what's going to happen, like Bad Bunny singing songs, like who knows the lineup of those songs? Like just think for yourself. What's the chances that this information could be leaked out so unbelievably easily? And if I don't have an information edge, but the likelihood of someone else having an information edge is true, maybe I shouldn't bet on those markets. Like, this is just like regular stock stuff. Just know where you have an edge and know where things can be highly manipulated. What are your thoughts on Robinhood's new venture fund? I think it's fine. I'm not going to be participating in it or anything like this. I don't really like the same reason for me not buying funds for the most part, especially funds that have like 8 names in them. because you're not really getting much diversification. You're buying, potentially some businesses you like, but forced to buy other ones that you don't care for at all. Maybe you love Databricks, but to get access to Databricks, you have to buy 7 other names you don't care for at all. It's like your return on that individual name could be severely hampered by you having to buy Boom Supersonic. I'm all good. But do I like all the problems of private markets that they're trying to address? Yes. But they're creating a new one, which is that, you don't actually get concentrated, concentrated into an individual name, which SoFi has already addressed with their Cosmos funds that you can end up buying into, which is an entire fund based into one company. So you can buy SpaceX or what was the other one? Not Anthropic, but there was a couple of them that they've done where it's a fund of one company. So at least you're getting full allocation into a SpaceX if that's the name that you want. Am I going to pay attention to Walmart's earnings today? I don't think I think Walmart had earnings. Am I incorrect here? I thought Walmart had earnings sorry. That's, Thursday morning. That might be today for you, but it's not today for me. That's tomorrow. Tonight, after the market close, we have Carvana, Occidental Petroleum, DoorDash, Coca-Cola, Figma, Booking Holdings, eBay, Cheesecake Factory, Vimeo. It's an exciting day. There's a lot of very fun names. I don't have a stake in any name, but you know what? Nonetheless, these are some pretty interesting companies. Carvana, man, that's going to be the big name of the day, I think. But boy, oh boy, does that company scare the crap out of me. It always frightens me whenever multiple companies do short reports on a business, all saying the exact same thing. Like the accounting's fraudulent. They've got a bunch of the father-son combo or whatever is I don't know. I'm just scared of the whole business. No bueno. I'd rather put my money into names that I can understand a little bit better. Venture fund. I like Hood's energy. Means it's volatile, but keeps within the rails. It's great. Yeah. I mean, if you like those businesses, get in there. Nice to see Shop continuing to run. Well, I think there was a couple super investors that also took new positions in Shopify. I actually think one of them was Brad Gerstner. So yeah, that was quite exciting. Also, how does the Jesus Christ coming back even more? How does that event contract even get paid out? Because for real, and I'm not going to get religious on you guys or whatever, but the whole idea about Jesus is that they didn't even believe him. They hung him up. They were like, bro, you're not the prophet. All right. They're we're going to crucify you. If Jesus did come back, who's to say that Poly Market would even agree that that's Jesus? Not just some Hollywood LA dude that's just parading around like a Charles Manson type figure. How do you even know? They'd be like, that's not the real one. No, he's doing some David Blaine shit with that wine. They This guy says it would be obvious this time. I think it would be way less obvious. You got camera trickery, AI, David Blaine magicians going around. I wouldn't trust any. Bro, he puts the net into the ocean. He brings out tons of fish. I would think it's all set up. This is a Hollywood stage. Okay. Okay. It's always good, What really brings an audience together is that we talk about religion and politics and finances. So this is really good. I'm sticking to the script here. Let's go ahead and have a listen to, well, we already talked about Meta and Nvidia, which I'm super excited about. Love that for them. Love that for me. Anthropic, did I already talk about the $80 billion that they're expected to spend through 2029 on Amazon, Google, and Microsoft? I like that. Okay, I really had changed the the mood of the chat. I apologize. You know what's also exciting? Nvidia GTC. They specifically said, Jensen said that they are going to announce chips that the world has never seen before. You think the product cadence is slowing down here? You think it's slowing down? Heck no. I'm betting long on Nvidia, and I have to prove, like, guys, please help me. I have to prove Steven Fiorillo wrong and that this company will get above 250 this year. It's already February. Okay, we only have a little bit left to go. Let's just push this company a little bit more, like 28% roughly, whatever that number is. That way I get a free dinner. The original bet was going to be 10 grand. And then Steve said he didn't want to take my money away from me. That's how confident he was. He wasn't worried about losing money. He was worried about taking my money. It's always good to have a couple friends that are also like father figures, where he's like, Tanner, you take care of yourself. No, it's all good. If Jesus is back, we will not care about Nvidia. I'm always going to care about Nvidia. All right. I'm always the Vera Rubin NVL 72s is the closest thing that we have to that's a technological god right there. No, I'm joking. Not here to offend, okay? I'm shooting for jokes. They might not always work. I'm taking religious and political risks here. You got to risk it for the humorous biscuit. Okay. Like this stuff just makes me angry. I'm like, Chipotle's up as much as Nvidia. Oh, did they sign a deal with Meta as well? Are they one of the biggest? Obviously, I'm joking. They're at very different prices today. It's hard to move a $4.6 trillion business. Okay, we talked about Uber. So let me mark that off. We ended up going through a lot of Nvidia and the Meta deals. Robinhood ended up getting an overweight rating from Cantor Fitzgerald with $100 price target, saying that although they're still a big believer in this company, it's just peers are lowering their multiples and market volatility could potentially put pressure on fundamentals. So, yeah, got to be careful with this name. Nvidia chips and guac. That's funny. I haven't heard that. What about Zeta TTD? What, like about those two companies, or was there some sort of weird partnership I didn't hear about? I don't follow Zeta, to be honest. Not that I don't care about the business. I just don't care about it all that much. Do the math on that. Okay. Where is Zeta, by the way? Are we still like at the $14 ranges? $15.85. $3.9 billion business. Brian Armstrong just said that the Clarity Act is hopefully coming by April. We'll see about that. Tanner, just admit you're a Zeta maxi. Yeah, I know. It's like half my portfolio now. No, haven't taken a stake in Zeta. Anytime that I even remotely think about buying Zeta, I'm just like, oh, I'll just, buy more Meta. I'll just take a deeper share in Meta and call it a day. This company is going to grow at 30 plus percentages. Like, we don't even need to buy small names. The companies growing in the 30 plus percentages are here and now. Imagine using your one green membership message just for this. Robert, good to see you. Thank you, brother. Meta is growing at the 30 plus percentage rates. Okay. I'm so hopeful for this company over the long term. I don't think that they're going to be innovated away. I think it's, takes away a lot of the risk betting on Mark Zuckerberg than betting on a founder that I know nothing about. That actually may or may not have a shadier background that people are not giving credit for. SoFi 20? You guys suck. You got me all hot I almost said hot and bothered. You guys got me all excited. And then you just dumped on that news. Well, eToro, what's that at? Down 3% after a pretty exciting earnings day, bringing it up nearly 20%. I actually think they did go up 20% and close on 20%. Now down 3.5%, back down to 31.93. I was reading Devin Ryan's report. Imagine using your one green membership message just for this, quoted Robert, says Ray. And says Renee Gomez. Thank you, guys. But Devin Ryan ended up writing a report once again on eToro and put the price target on this company at $90 a share. 90. Sorry, I read Matt's stupid comment. It made me laugh. This company is $32 a share, and they put a $90 price target. So not following, the normal price action that Wall Street investors or Wall Street analysts usually just follow. They said eToro reports strong top and bottom line beats, and we'll still see a compelling risk reward in this top idea stock that we've reiterated as a market perform rating and maintain our price target at $90 a share. January KPIs were mixed, but taken together highlight the benefit of the diversification and appear strong on balance. We are pleased by the strong fourth quarter results, but more importantly, we believe that the market continues to far underestimate why eToro has the right to win and can continue to compound from a still smaller base. I've also had trouble seeing it as well. Mosh, Microsoft thoughts. Microsoft thoughts. I think, I believe in Microsoft. I think that they got greatly oversold and they're one of the cheapest names in the Mag 7. And if you can get this company under $400 a share, I think that's pretty crazy for a company that just like... By the way, so I'm listening to Steve Jobs's the Walter Isaacman biography. And Microsoft is featured in it a lot, obviously, because, that was the big race in personal computers. And Microsoft was not the first to win. Like, actually, I think the history of Microsoft is that they never do get it right the first time, and that they just constantly reiterate, and they never give up, and they just never have gotten fully kicked out of the market. So I think that the fact, just like Google Chrome and or Google Gemini and a lot of these things, where like people are just like early judging Microsoft Copilot versus the rest of the market, or they're judging whether or not AI is going to fully replace software, like it's going to kick out Excel and kick out a lot of these things and lower the multiples on Microsoft 365. I think it's just way, way, way too early to judge that. And what you're actually looking at, past a lot of the speculation, is a constant compounding, high margin, the ability to cut staff if they feel like, some of their jobs are repetitive or can be replaced by agentic AI. And it's like one of the leading tech firms in the entire world that's being sold off. Yeah, remember Bard was a thing. Yeah. Like people just make decisions in this extremely fast moving market. And they're like, Google's out and dead. And I did that, but I'm not doing that again. I'm not a fan of Microsoft. They're the name in the Mag 7 I'm least interested in. I mean, I could think of other names I'm less interested in. Lord Tanner. Thoughts on ASML? I'm split if I should take profit up 120% and dump into Amazon and SoFi or just let it compound. Any thoughts? I can't speak directly to ASML. It's not a company I follow too closely, but they've got a pretty significant product moat. And I'm more of the opinion that you should probably just let your winners ride. Unless you have some reason to doubt ASML. I obviously believe in Amazon as well, but like, if I'm not even mistaken, the multiples on ASML are still like pretty cheap comparatively. I could be wrong on that. I have not checked on them in a while. 50p. I don't know. I don't want to tell you how to play your port. But they're a strong business and probably not going anywhere for a very long time. And I wouldn't rush into rotating your winners into putting them into the companies that haven't worked yet. But if you did, I'd be like, hey, I get it. Let's see. Read the article on Yahoo Finance. YouTube stocks. What the heck am I saying? U.S. stocks are off to their worst start versus the global market since 1995. Guys, like it or hate it for ideological reasons, but big money is leaving the United States. I think that you could probably stop and read. There's always articles that come out and bet against the narrative or something like this. Like there's constantly, like there's been so many times where Asian stocks have been the extreme height, and then there's a complete exodus away from Chinese stocks and these sort of companies, and then there's a ton of investment back into U.S. stocks. I don't think you could go ahead and read an article and be like, guys, this is the crystal ball, and no one's paying attention. Just as fast as they're leaving the United States, they can come right back. I wouldn't look too much into that, to be honest. Your 3 must buys today? Oh, guys. I really like doubling down on the companies that I already know. And the companies that I like to add to here are names like Meta, Nebius, SoFi. Like, I like those names. Those are the ones that came to mind. But me and you have very different risk tolerances and timelines. I'm not saying that those are going to be the ones that work the most over the next whatever time. Like, people will look at those names 3 months from now and be like, Tanner got them wrong. It's like, bro, I'm not trimming 3 months from now. I'm buying what I think are like AI proof, fast growing, margin expanding compounders. I like compounding machines. Sorry, Tanner, I invest in both Europe and the US, and I see where the trend goes. Everyone's free to believe what they want, but don't complain on the market afterwards. Well, yeah, no, that's for sure. But I think that there's definitely certain US companies that have expensive valuations, but the ones that I'm buying, I honestly don't think they do. And I would much, much prefer to bet on the United States than Europe. You know? And yeah, I mean, there's like some good Dutch companies, Adyen, ASML. Like there's some exciting names. I'm not like, but overall, which index do I think will do good over the next 5 to 10 years? Like, oh yeah, no, I can't wait to get in buy European companies. Yeah, they've been at the forefront of innovation, and you know what they say? Their work culture is unprecedented. No, it's like literally quite the opposite. It's like, no, the work-life balance is amazing. It's like, yeah, I mean the quality of life there is great. I wouldn't bet on the stock market. Um, Tanner, what do you have in LatAm? Duolingo, Mercado Libre, Nubank, in opposite order. So Nubank at my highest, then Mercado Libre, then Duolingo at the bottom. But I really like Duolingo right now. What's Europe been up to lately? I don't know. Putting fines on big tech companies for running their business. Like, for real. I read a thing that they make more money fining US companies than taxing their own businesses. That's, you know what? I'm not even that much of a political person, but like, come on, bro. Oh, sorry. Did I say Duolingo? I meant D-Local. Yeah, you're right. I don't have any stake in Duolingo. I meant D-Local. DLO. Okay. Let's see here. Yeah. D-Local. DLO. Okay, let's check on gold and silver really quick. Gold's up 2.2%. Silver is up 5.4%, 69.96. Cantor Fitzgerald just put a price target on Nvidia of $300. The article is called "Stay Calm and Trust in Wong as we remain at the cusp of the rack scale supercycle." All right. If we have to. NVIDIA and Nebius ran a joint benchmark through NVIDIA Run AI to test whether fractional GPU allocation could improve efficiency and scalability for real-time inference workloads without compromising performance. It's another piece that just came out today. Let's see here. I don't want to spend too much time on this, but what did they find? Nebius AI Cloud is the foundation for production inference, delivering full stack scalable NVIDIA compute, networking, and storage designed for predictable performance under real-world concurrency and mixed workloads. NVIDIA Run AI layers intelligence GPU orchestration on top, using fractional GPU allocation and dynamic workload scheduling to maximize utilization while maintaining stable latency and throughput. Okay, but what's the answer, ladies and gentlemen? It for real is not telling me. Okay. I'll read that later then. You continue to imagine that America is the only element in the world financial system. This worked as long as the US was considered an element of stability. It is not anymore the case. Yeah. I mean, I guess that's why Russia wants to get back on the dollar system and all this stuff. Like, I mean, there's bear cases galore. Good luck on your European venture. For real though, like I don't even like the outcome that you are going to have on your US European investment or whatever. I care zero, truly. Like for me, it's easier to invest in companies that I see and feel. And that doesn't mean that I don't invest in individual names like, an Adyen or an ASML or some of these companies that like I know that the businesses that I like are working very closely with them. But I'm just not that much of I think that that's your strategy. You want to play more of the macro game and see how the tides are shifting where like I think so many people bring up this fact, like where they talk about these decades of the markets being essentially flat or something like this. And people go, oh my God, I could never imagine investing in a market where the stock market is flat during, a 17-year period, as Warren Buffett talked about, like how crazy that market was. But that didn't mean that individual companies weren't moving during those times. This is like, I'm not invested in the S&P 500. I'm picking individual winners. Those will be stock pickers markets. Same thing for the United States. Maybe, as you say, the big money is shifting away from the United States, but I'll focus on the individual companies that are compounding and making more money because they don't have to charge in US dollars. If the euro or whatever currency you think is going to be the dominant currency going forward, they can charge in that currency. It could be Bitcoin for all I care. But producing assets can sell their product for whatever they want to sell it in any currency. And I, for real, will never bet against the United States. Okay. And I don't even live in the States, which is funny. But I make all my dollars in the United States, and people can talk all this sort of crap like, oh, look how much the dollar's running down. I'm like, bro, yeah, okay, hedge it with Canadian dollars. See how that works out for you. We're doing even worse. So, not everything's perfect, but I think we're doing way better than a bunch of fear mongers will make it out to be. Okay. Let's go ahead and see what else is new. FOMC. Oh my gosh, I completely forgot. Oh my gosh, I completely forgot. You guys got me talking about Europe here. To Where am I going here? PDF. Okay. Nope, that's wrong. No, never mind. It is right. A joint meeting. Let's see here. A joint meeting of the Federal Open Market Committee and the Board of Governors of Federal. Is it this right here? The unanimous decision that we're seeing for no, this is old. Do we have are the minutes already released? I see it here, but it doesn't look right to me. And we'll see if CNBC is covering it really quick. Let's have a little looky-loo. Yep, they are. Okay. Here, let's have a listen.
Of the decision to pause saw policy in the range of neutral estimates. Dissenters and those otherwise opposed to pausing saw the policy rate as, quote, still meaningfully restrictive, and they were more concerned about downside risks to the job market. Now, several said the statement should mention the possibility, get this, of rate hikes. They disagreed with what the statement said. They said the statement should have been two-sided, possibility of cuts, but also possibility of rate hikes if inflation did not decline in line with expectations. Some said it was appropriate to hold policy steady for some time, as well as a number saying further cuts were not appropriate until, quote, disinflation was firmly back on track. Several were concerned that further cuts should show a lack of commitment by the Fed to the 2% target. So rather than coming together, it looks to me like both different sides in this debate over the outlook for policy are kind of hardening their positions here. On the dovish side, they saw tariff inflation was expected to ease this year. Housing inflation expected to put downward pressure on inflation. We saw that in the last CPI report. Several saw higher productivity growth, along with some of the deregulatory aspects of technological change, also putting downward pressure on inflation. But some wanted to wait to see whether or not that happened. The risk of inflation above 2%, according to some on the committee, was meaningful. Most saw the job market stabilizing in this low higher environment that we've been talking a lot about. Economic activity seen expanding at a solid pace. Pretty good agreement on that. The consumer appearing to be resilient, and growth expected to remain solid in 2026. As for risks, they discussed risks around AI investment. They discussed risks around private credit and hedge funds and their growing footprint in the equity market as well as in the treasury market. So I'll leave it there, guys, but I don't see this committee coming closer together on this issue. Remember, we had 2 dissenters in the last one, and I think if everybody had the vote, there might have been a few other dissenters in there. But those who think the Fed ought to pause, well, now there seems to be a contingent who thinks the Fed ought to talk about two-sided risk if inflation does not begin to behave the way they hope.
In other words, they are still, Steve, considering the possibility that, I don't want to say a rate hike, but you said it, two-sided concerns.
Right. That's the new emergence here, that there is a group of people who think the Fed ought to be a little bit more serious about its 2% target, Kelly. And what that means is the idea of explaining to the market that the Fed is not going to tolerate forever inflation being above 2%. And it's important to give a little bit of that background, Kelly, in the sense that you know that CPI came in very well behaved at a 2.4, 2.5%, but the Fed's preferred inflation indicator, which we're going to get on Friday, is going to be up near 3%. And that's part of the debate here. That's part of what I think is animating some of those who are on the more hawkish side.
All right, Steve, thank you. Steve Leisman, not a huge reaction in the markets, but let's home in on that a little bit. And for that, we turn to Rick Santelli. 408 still on the 10-year, Rick, but again, a committee that could, when the new chair, you got to get through the confirmation process, but what a time to be walking in.
I think that the markets actually are giving us great context. Let's look at this. We had a horrible 20-year auction, so yields were elevated. They were elevated to the highs of the session. The minutes hit. Did they move off the highs of the session? No, they did not. And Add in the dollar index. Dollar index has turbo thrusters today. It's having a big up day. It's had several up days in a row. So let's put all the pieces of the puzzle together. What the Fed really is worried about, by the clumsy way they talked about it, that disinflation is slower than it should be. That's just a weird way to say that inflation isn't coming down fast enough. And I understand that. But it certainly seems, though, the weight of the labor market versus what's going on with inflation away from their target, that's the one to concentrate on. And I think that's what the markets of the dollar index are telling us here. So ultimately, whether Steve is right or not, the CPI was cool. And as Richard Fisher said, we've made great progress, basically 5-year progress on year-over-year core at 2.5, but it's still not at 2%. So if Steve's right on Friday's better, more Fed-enjoyed number, the PCE, that'll make a big difference. But I'm going to go out on the limb there and say, I don't think it's going to be as lofty near 3% as some of these calculations are, which means the market could be caught off sides on higher rates.
Wow. Rick, really appreciate it. Thank you very much. All right. So with that in mind, why don't we turn now to the markets and your money? All the major averages right now are in the green.
All right, an absolute nothing burger, and I don't care. Let's talk really quickly about, do we want to talk about Upstart or Galileo's AI website concierge? They announced a new AI product called Gala, which is going to help people set up online websites that also help with payments as well. Yo, Tanner, I snuck my computer into school so I could watch you. Brother, thank you. That's awesome. Don't get in trouble. Yep. Parsifal, thank you. I literally hear this all the time. And then a new chatter will be like, yeah, but I haven't told you this every year. I'm like, okay, but it's hard for me to separate you from all the other people that I've never met before that tell me the exact same narrative that's turned out wrong every year. You know? TSM, though? That's a good name. I like TSM. He's going to get suspended because of you, Tanner. Bad influence. I didn't tell him to do it. You spelled grab wrong. Hey, brother. Hey, I still need to get the what do you call it? Interview with Amit. He's going to give me the full deep dive on grab, and who knows, maybe that becomes a part of my international strategy. But Nubank, definitely. If he keeps following Tanner, he won't need school. Bro, you'll need a lot more school. Like my grammar, my mannerisms, it's everything that you learn for the most part. It needs to be washed away. The only thing that you should keep is that I have some semblance of patience whenever it comes to the market. But I mean, you can read a textbook for that. But I appreciate you being here. Okay. But stay in school. SoFi 100 in 3 to 5 years. I wouldn't be focused on that. That's for sure. Like a lot of very, very, very interesting things would need to happen. But I'm not focused on that. Okay. What else do we need to cover? If it's nothing, then why don't we take a look at the broader markets and then wrap it up for the day? QQQ's up 1%. The initial FOMC minutes did nothing to the market, literally nothing. SPY up 0.6. Broader indices looking great. Mag 7s all green. It's nice for us to share a moment together, right? The Apples, the Amazons, the Teslas, we can all be green together. Figma up 7. Yeah, there's some pretty good movers here. Global Payment Network up 16. Upwork up nearly 10. Wealthfront up 9%. I guess they did some home loan acquisition or something like this, or it was owned by their CEO, but then the CEO sold it to the business, or I don't know. Shopify up 9%. Brad Gerstner took a new position in this name. So that ends up climbing back. That's going to look really good on my portfolio today. Bloom Energy, also another name that Brad Gerstner took a new position in, up 7.75%. Kratos up 8%. Venture Global up 7%. This company's at $9.44 now. Congratulations to the shareholders of Venture Global that caught this at essentially half the price not too long ago here. This is in the last 3 months. This company was at $5.70. What did I do with it? Nothing. AppLovin up 7.5%. Chime up 6%. Ended up breaking below $20 again. Jeez. We're still in the green on this name. We're going to hold it for at least seeing this quarter and then next quarter. So I want to see Q1's print, and then I'll probably look to trade out of Chime. It was only a trade, you know. I want to see 2 quarter prints. Being a super investor is a cheat code. Yeah, I know. It's just getting to that status is the hard part. There's a lot of cheat codes in life, but they require you to be freaking amazing at your job before you actually get a lot of those advantages. and honestly, they don't last that long. There's an initial pump whenever people find out that, like, you know, Berkshire buys a company or something. That's not stopping a Heinz or something like this from going down. Like we know that, you know, he took stake in Google and it initially pumped up. But if there's more bear cases to Google, people will sell it off and they won't have a second thought of whether or not, you know, Warren Buffett owns it. Okay. Ladies and gentlemen, that's it from me. A little bit of a shorter day today, but I have to go record this video about SoFi. So if you guys are wanting to see my full thoughts on the SoFi 10K that ended up getting released, make sure you guys hit the subscribe button, notifications, whatever, if you guys are interested in that. If not, don't. Thank you all so much for watching. Really do appreciate your time. Bye for now.